Our portfolio has popped another 55 grand over the past month. That's almost as much as I lost in April on a single day. Twice. But it's not like I remember specific red days or anything. For real though, none of these market conditions move the panic meter for me as a passive investor that enjoys all market conditions for different reasons. Red markets are my favorite because of all the buying opportunity. I've always said that, but it wasn't until a few years ago that I could have passed a lie detector test in the moment. If you've been around the channel, you know the drill. We stick to our target allocations in every single market condition. We'll expand some more on that, and of course, we'll also get into the portfolios, value by holding, the new transactions for May, our dividends received, a HODL factory update, and I'll keep that one a little higher level in this series, and any future strategical realignments. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please give that like button a solid right hook, subscribe if you haven't already, and drop me a comment below with anything that comes to mind. You know what time it is. Let's grow. May insights. The market has been relatively relaxed lately, to where I don't have any specific topics to dive into this month. We might be able to keep this one under 47 minutes. Although with needless comments like that one, I would still smash the over. I want to touch on the concept of simplicity. Most aspects of investing are simple, and life is the same way. Let's go back to my feelings about red markets. It really did take me a while to love a red market in the moment that it was happening. And the concept is simple. Buying stuff on sale is objectively good. You spend fewer of your hard-earned dollars to buy an asset that you would have bought anyway. But unfortunately, simple isn't usually easy by default because we are human and our emotions make us love instant gratification. The red market hurts because we're seeing the assets we already own drop in value at that moment. Or having that bowl of ice cream always has more appeal right now than going to the gym. We spend our money on things we don't need because we want the shiny new toys right now instead of investing in our future. What's important is to turn simple into easy. This will require critical thinking and a mindset shift. It works like this: hard choices, easy life. Easy choices, hard life. Set yourself up for success with quality, well thought out systems. And speaking of the 46.5 minute over under, let's move on. Portfolio overview. The spreadsheets that you'll see in the rest of this video are available for you to use for free in Excel or Google Sheets, whatever your preference is. Link in the description below. As always, we'll dive face first right into my accounts, and then we'll open the spreadsheet that brings everything together for those beautiful target allocations. We're going to start out where we always do, out here on E-Trade. And for context, this is where the majority of our assets are held, and I have huge news. I finally got the power of attorney form correct and notarized and submitted, and my wife's assets are included now. I don't want to have to hide all the accounts, but this has my traditional IRA, my 3 previous 401ks that I've rolled over the years, my Roth IRA, I'm in the process of a Roth conversion ladder, and our taxable account. And now it also includes my wife's Roth IRA. I have these sorted by value, and our first holding, of course, out here in E-Trade is SCHD. And you can see that somebody may or may not have OCD, bought a couple extra shares to get us to a nice cool 15,000 of them at an average price of $24.67, and that's currently sitting at about $393,750. And then our second largest holding out here is VGT. This one's all in my traditional IRAs and a little in the Roth IRA. It's at $246.48 per share, and that's worth a total of almost $306,000. And then our third holding is none other than JEPQ, and it's out in both of our Roth IRAs. This is a recent addition that we made from QQQM to JEPQ as we approach retirement. And we have 1,875 shares of JEPQ, worth a total of $97,931. And then our money market is at $80,830. And this is a high yield savings account within E-Trade, is at about 4,000 as well. These will be added together in Seeking Alpha. And then my wife and my last holding here is IBIT, and we have exactly 1,000 shares. I did recently sell 50 shares to get that clean 1,000. You can see our average cost is $35.79 a share, and it's worth a total of $59,360. This S&P 500 fund and QQQM are both my nephew's account, which will be out of here in about 5 months when I get him up and running on his 18th birthday. So these will not be aggregated out to Seeking Alpha. And you can see our total asset value is $945,639 out in E-Trade. So not too shabby. But now it's time to pop over to where everything rolls up. That's Seeking Alpha. It's so nice having the E-Trade out here in Seeking Alpha match up with the E-Trade that I show you guys every month with that power of attorney. That disclaimer was getting old in the last few videos. And just a quick recap here. Here's the 15,000 shares of SCHD, 500 of VGT, 1875 of JEPQ, the money market and the cash, the high yield combined, and then the 1,000 shares of IBIT. So all the values should line up with what we just saw in E-Trade. And I should mention, I am doing this recording on 6/2/2025, close of market on Monday. The market just closed 11 minutes ago, but these numbers in Seeking Alpha will be slightly different than what we see in the spreadsheet here in a bit. The spreadsheet will be about $6,200 less than what you see out here in Seeking Alpha, which is this $1.49 million, because I make the spreadsheet update every Friday at market close. Quickly diving into the wife's accounts, we have the 401k, which is entirely VU, and she has 827 shares. This one grows a little every other week as she gets paid, and it's worth $450,000. And then the HSA is in VUG, which is the best available option there, in our opinion. And she has about 93 shares worth $38,788. Not too shabby. The HODL Factory, that's where that YouTube money goes, $100 a week. It's up to $20,246. And then other cash equivalents in high yield savings accounts and a few other things, just to diversify a little from our E-Trade cash, is at $44,106. You add it all together and you have this $1,494,837. This is what it's worth right now as I record. We're about to rewind the clock by 3 days as we jump out to the spreadsheet. Okay, the first tab we're going to visit is just the main data entry tab. And these are the values as of market close on Friday. And you can see the same core holdings, VU, SCHD, VGT, JEPQ, and down the line. We won't read them all. There's a variety of cash sources. So what this spreadsheet does, you punch them in here, it gives you your total, and where the value lies is out here in the target allocations. And you can see on this left one, we have the holding values by symbol. So VU is our biggest holding. That's the 401k, SCHD, VGT, and down the line. And then I have them by type, because this target allocation is where I make my purchasing decisions. And the cornerstone is by far and away the biggest, and it's just going to ride because we continue to max that 401k and make sacrifices to do so. Now, value and growth, if you've been watching for a while, you might be wondering what happened here. I finally moved JEPQ into its own category, and this is how I used to do it. I go back and forth because JEPQ is a growth ETF. It has that high PE ratio. It's identical to QQQ's, but it produces premium income. I was going to throw it into the cornerstone since it really follows VU's price movements, and you can check that out in Seeking Alpha. Make sure you're on total return to include dividends. It's pretty wild how close these have been for the 3-year history of JEPQ. But I decided, you know what? Get it out of the way. It goes next to cash. We have money market and high yield savings accounts and JEPQ in that Roth just to feed everything else. And that leaves us a little light on growth compared to value. So that was a long way of saying we now have room for a lot more growth. And if you remember my tease from a couple months ago, I already know what's going to be added to the portfolio, but I have not disclosed it yet. And I'm not going to until it happens. Oh, and I should have led with, I like to keep growth and value even in my portfolio as a general rule of thumb. So it becomes really easy on what I need to buy when I look at the target allocations. Cash, historically, I like it about 10%. We're a little light right now. It's hard to build that up without my high paying job that used to flow in. but the cash flow is making up for that a little bit. I would still like to see this increase. I have been reinvesting dividends within the taxable account and the traditional IRAs into cash each month. And the Roth goes into SCHD or JEPQ, or a new one soon. And then Bitcoin I've gone back and forth on, what's my buy threshold? It's been under 2 or 3%. What's my sell and take long-term profits to fill into these has been over 4 or 5%. I'm just going to chill with my 1,000 shares of IBIT for a while. And then the HODL Factory, there's no goals, there's no type. Its PE is close to my cornerstone, close to VOO, but it's different. It's kind of dividend growth holdings. So I just have it on its own as well. Really, the decision-making factor here is right here. New dollars go into whatever one of these is lower, or if cash is low, it goes into this. So these are the ones that are assessed. Everything else is sort of on its own system outside the target allocations. And I'll show a quick view of the snapshots. We won't spend too much time out here. Our last all-time high was December 6th, 2024. A lot of life spinning in here too. A new family SUV and a huge Roth conversion tax bill. But still, we're down by about 100 grand from our all-time high, which is a legitimate probably 40 grand of the market. And you can see the week by week playing out. We've been pretty strong in the past 6 weeks. We're up almost $143,000. So we've been bouncing back, and May was pretty kind to us, but nothing crazy here. I just like to see the progression over the years. It's fun to scroll through and see how this all went down. And this tab shows the portfolio value by month. And in May here, we ended up an average portfolio value of 1.467 million compared to last May's 1.343. So we're up quite a bit. In April, things got dicey. We're always all over the map. 2022 got ugly for a while too. But sometimes I like to just look at this, zoom out, and chill. Ignore all the noise and all the haters. And now this is the last one we'll visit. This tab's really cool because it has our investment value, which is all linked from everything we just looked at, and then our monthly contributions, and that includes 401k plus a juicy match, HSA, and the HODL Factory, averages being 433 at that 100 a week. And that's our only investing most months. I assume an 8% nominal return, which is about a 5% real return. If you're an inflation person, I do it separately. So I assume the market will be 2% worse than the 100-year average. I'm an optimist, but I don't like to assume crazy returns. And I have these ones highlighted, 2 million and 3 million. 3 million's retirement territory. 2 million is some drastic changes to the portfolio holding mix territory. But yeah, life is good. Let's see where the dollars that neglected the shiny toys went. Portfolio contributions. We max my wife's 401k and her HSA every year, and this happens automatically in the background as she gets paid. And then we put $100 of my YouTube earnings into the HODL Factory on M1 Finance on a weekly basis. The rest of my earnings, with full transparency, has been about $500 to $1,000 per month, sits in a high yield savings account. It's also out on M1 Finance. And then I do the rest of our investing manually out there in E-Trade. And drip is always off because I have to anally stick to my target allocations. Here's what we did in April. Before we cover the buys for the month, I did already mention that I got rid of 50 shares of IBIT, which I believe was my first sell of 2025. So while it's not on here because this is just to show what I bought each month, I thought it was important to note that I did sell 50 shares of IBIT and put the money into the money market based on the target allocations. So for the purchases, we had 4 weeks worth of HODL Factory purchases at $100 each, so a total of $400. And then the other default ones, VIGIX, that's the mutual fund. I just call it VUG and Seeking Alpha, same thing. 1.46 shares for a total of $300 and $208 per share. That's the HSA. And this will be random month to month because we pay bills out of our HSA as well, medical bills. We're not receipt savers, and there's reasons for that. This will be all over the map. In fact, the last couple months, I believe, have been 0 new purchases. And then VOO came in at $2,833 total dollars, and the average price was $527.52. And I had skipped over these two on purpose. This new money came from JEPQ dividends, and I think a little little money market when I got greedy to get SCHD exactly to 15,000. So this isn't new money, but it's reinvested money, so I count it all the same. And that's a total of $5,072 being invested this month. Time for the juicy stuff. Dividends received. Dividends are fairly tame every May, but I was impressed with the year-over-year progress in this one. Check it out. You can see that there's not a lot going on in May compared to April and especially March, year by year. But this year we actually did outperform last month, and we crushed May 2024 as well. And in 2023 we did things differently with some treasury ladders, so we'll ignore this one. But comparing 25 to 24, in fact, let's drop it down here and see where the $300+ outperformance came from. With JEPQ, this year we had $1,118 of dividends compared to last year's $703.59. There's the difference and then some. The M1 mix tripled its dividend output from $5 to nearly $15. And then again, treasuries, that was a 2023 thing. VMFXX, last year I had all of our cash in it. This year I have a little mix. But even when you add these together, it's $418. Which tells us we were a little cash heavier last year at this time. Really, the big difference maker was JEPQ. And none of our other holdings spit out dividends in May. It's a pretty chill month. But looking at 2025, our year-to-date dividends is $13,000. And let's see what that looked like in 2024 here. We'll use our slicers. We're at $13,016 in 2025 compared to $10,357 in 2024. We are smashing our pace. I'm loving it. On to the one that matters the most. Portfolio performance. We'll jump right out to Snowball Analytics to see how this bad boy did in May. We're starting out here on the analytics page, and before I dive into that, I should note that we currently have everything selected. This includes ETFs, stocks, and cash. So when you add everything together, you get a similar number here as we had in Seeking Alpha. It's a little higher in the spreadsheet once again, because this is live as of today. And then I also have a stocks and ETF only tab to get rid of the cash, so we can see how we compare to VU. Snowball Analytics is great in that it lets us compare apples to apples by having individually updated portfolios here, but you can also group them together in things like stocks and ETFs. It just pulls these two portfolios, and then everything pulls all three portfolios. And then of course you can look at them individually. I love how you can break anything down out here. Starting in the analytics, you can see we're just shy of $1.5 million, and we have a pretty nice total profit. Our internal rate of return is about 14.5%, and we have 2.72% yield on 7.3% dividend CAGR. Not too shabby, I would say, all things considered, especially throwing cash in there. But we want to live out on the stocks and ETFs. I'm out on the growth tab now, and I have them selected against VU. Oh, and it pulls all, and this isn't all my history, unfortunately. I couldn't get it all in there, but let's focus on year to date first. And we are behind VU by 1.98%. So it's taken it to us so far in 2025. And then grouping this by May alone, the portfolio is still behind VU by 0.42%. So not a great month and not a great year so far. Maybe if we do this long enough, we'll find something that makes me look good on paper eventually. And I just realized I was on portfolio value, which is good stuff because it lets you know if you put every dollar into this holding, like VU, for example, instead, what you'd be at. Portfolio performance assesses just the percentage change of the profit. And you can see here in May that our portfolio was up a tremendous 5.71% to the market's 6.27. VU had a great run. We did okay too. And this section right here will provide us a little more of a breakdown of our performance. I had to zoom it out so you'll see a little more gray over here, but I think I got everything in the screen. So I selected May, the time frame that we're in. One thing I like about this heat map, it shows the gravity of everything. You can see VU is a big percentage of our portfolio, and it was up 5.5%. And then SCHD here is up 1.8%. So that really hurt us compared to the quote-unquote market of VU. Whereas VGT, our third largest position, was up 8.4%. And JEPQ, that's very disappointing. Usually it's right there with VU. Even on its lifetime, it's just ahead or just behind VU every step of the way. So it was a rough month in May, all things considered, compared to the market for JEPQ. IBIT saved us a little bit, and VIGIX also outperformed. So really, if you think about it, our growth things here, a little alternative here / growth, I guess. And then this is definitely growth and growth, outperformed the market, which hasn't been the case all year. And our SCHD is just, let's call it what it is. It's been bad all year. It hurt us. So overall, when you average everything out, we were within 0.4 something % of the market, but a big culprit was right here. Not a great month for the HODL factory, and we'll get more into that in a different video, but you can see how little of a percentage, just 1.4% of the overall portfolio. So I like this view just for perspective. And now I'm popped out to the metric tab and I actually see a brand new one here. Snowball is always adding features. Is that time weighted return? Time weighted, interesting. 183.23. I have not seen this yet. I do this live with you guys. I think, are we way ahead of the market? I don't know. We'll touch more on this one next month. This is a brand new feature to my knowledge. I like to show the PE ratio of our portfolio is 24.2, and that's overall. That doesn't count the cash. So this is just to compare, stocks and ETFs against VU. Our beta, I've always liked, were 0.876. So anything below 1 is a little less volatile than the market. So lower than the market, that's good. But then our risk-adjusted returns are quite a bit higher than the market, which is also good. And that's the Sharpe ratio. That's weird, requires attention. Well, we're at 1.982 to the market's 1.6. So I guess if we require attention, then the market requires more attention. But yeah, on these risk-adjusted returns, we're high, and usually that comes at a higher beta. But I love our balance and our mix overall on these ratios, along with the PE ratio. This one I'll have to dive into a little bit. But Snowball Analytics, they're always just feeding you more and more stuff. And I'll dive into more of the features in future videos, but we gotta stop this one sooner or later. May was a fantastic month for the market, and I cannot wait to see what the future holds. Final thoughts. I recently opened up my YouTube channel membership called the Financial Freedom Friends. And I'd like to give a huge shout out to all of you that joined up, and it's a lot of the familiar names that have been great pillars of this community for a long time now. There's a link in the description below if anyone else is interested in joining. And this will never be required. All of my content is out here on YouTube for free. It's just to show that extra level of support only if you're interested. You are doing more than enough if you're watching the video at this point. I appreciate every one of you. And check out one of these 2 videos if you want to continue down your path towards financial freedom. Remember, money is overrated. Freedom is not. Thanks for watching, and I will see you in the next one. Peace.